Good evening, everyone, students. I welcome you all once again to our live coaching classes. And we are in the revisionary class of our subject, GST, which is part of your paper number 5 at CA Final. Now, we have been revising our syllabus. And now, today, we have reached the point where we will be concluding our sessions and will be completing the major portion of our syllabus. So it is very important, students, that alongside whatever is happening in the class, you should be regularly summarizing, revising these chapters. And now, since we all are preparing for the January exams, it is important that you should now be ready with your self notes so that during exams you may not be uh, bothered with referring to all such lengthy modules and all the other notes. So it is better that you have created your own self notes as far as possible for every subject so that it can serve as a handy guide to you all whenever you are preparing, especially during the exam period when the time is too short and you need to revise it and complete the syllabus at the fast pace. So let me just share my screen. So the topics that we are going to deal with today are again going to be interesting and slightly technical, if I can say. So it is important that you are in touch with the topic and you are also parallelly making your notes. And if there is any query question, feel free to put it across. So the first topic that we have to deal with today is liability in some special cases. Now this topic is applicable. Sir, I have not yet shared the screen. I'm just giving the background, then I'll share the screen. So in this topic, students, that is a topic on liability to pay in some specific cases or special cases. What we are going to study in the GST law is that, like we have seen, that there is a tax on supply. Like we have seen that there are different types of exemptions in different scenarios. In similar fashion, this particular chapter deals with the liability to pay tax arising for some specific case scenarios for some specific transactions. So this is what this chapter is all about. It is important, it is relevant for the purpose of your exams, since this chapter covers those special points where you will be studying the applicability of GST in some specific business setup or in some specific business transactions. So as you can see on your screen, the first provision in this category is Section 85, which deals with liability to pay in case of transfer of business. Now, when we are talking about transfer of business, under Section 85, what it covers? So it covers where the business is transferred either wholly or partly. How? By way of sale or gift, lease, leave and license, hire, or in any other manner. I'm sure you'll understand what all these different types of manner include. This is very similar to the definition or the concept of transfer in case of the Income Tax Act, specifically capital gain chapter. Plus, if you recall, what is important in this is that you are giving away, or I'll say you are parting with the rights to do the business, which is over here referred to as transfer of business. So the mechanisms by which you can transfer is illustrated here: sale, gift, lease, etc. Now, what does Section 85 says? Upon the time of such transfer, the transferor and transferee are jointly severally liable, wholly or to the extent of transfer, to pay tax, interest, or penalty, where transferee carries on such business either in his own name or in some other name. The transferee shall be liable to pay tax on the supply of goods, service, or both effected by him with effect from the date of such transfer. So basically, what this point deals with is, so whenever there is a transfer of business by any of such mechanism by way of sale, gift, lease, license, etc., then at the time of transfer, the transferor and transferee are jointly and severally liable. Now, what is this jointly and severally liable point? So let us say I have been running a particular business. Let us say I am running a hotel for past 8 to 10 years. Now, there could be a possibility that today when I am selling off this hotel to you, in future, there is some tax outstanding pertaining to these past periods. In this particular scenario, I have already transferred the hotel to you. Now, in this case, if tomorrow a liability arises, the question would be, who would be liable or responsible for such liability? For such scenarios, this particular provision, Section 85, says that even though I have transferred my business by any one of those mechanisms, either outright sale or only by way of creating a leave and license, etc., in such a case, in future, if there is any tax liability which is arising, including interest or penalty, that would be a joint liability of me and you. Also, me and you are independently also liable. In simple words, by inserting this section or creating this section, the law has secured its side. The law has secured the, I'll say, uh, if there is any future liability arising, then there should not be a problem that to whom the liability can be recovered. So law has secured this. So by creating this joint and several liability, either it can come to me, either it can come to you, or it can make both of us together responsible to pay this particular tax. That is what is the intent. That is what is the outcome of this particular provision. Next, where transferee carries on such business either is in own name or in some other name. So it doesn't matter whether the transferee is going to continue carrying the business in the same name. That will not change this liability. Further, the transferee shall be liable to pay tax on the supply of goods, service, or both effected by him with effect from the date of such transfer. So for past liabilities, they are saying it is joint and several, but from the day the transferee has taken over this business, thereafter, for all the liabilities, it is only the transferee who is liable. So obviously, after I have transferred the business, you cannot make me liable for what happens in future. So for that, only you, that is the transferee, shall be held liable, and the law will only recover tax from the transferee. So in case of death of sole proprietor, transferee shall be liable to pay any tax, interest, penalty due from the transferor. Next. Next scenario is liability of agent and principal. What does the law provide? Section 86. Agent either supplies or receives taxable goods on behalf of principal. Agent and principal are jointly and severally liable to pay tax on such goods. Now we all know under GST law who is an agent. So agent is that person who on behalf of the principal is either supplying the goods or either receiving the goods, where the goods are first received by the agent and then forwarded. This is what is agent in GST. So in order to be agent, the most important requirement under the GST law is that, let us say, the sales has to happen through agent. So the principal will send the goods to the agent. Physically, the goods are coming to the agent, and then agent is further selling it to the customer. If he is a purchasing agent, so from the vendor, the Agent is first getting the goods, the agent is physically receiving the goods, and then the agent is further forwarding the goods to the principal. Only where such transaction is happening through agent, this particular liability under 86 is attracted, which again makes both principal and agent jointly and separately liable. Then come another scenario of amalgamation merger. We all understand amalgamation merger. So when two or more companies come together, or when one company wholly acquire the other company, and the conditions spelled out under the law are met, we call it as an amalgamation or merger. In this particular case, whenever this amalgamation merger is as per the order of the court tribunal, and the order is to take effect from a date earlier than the date of order. So let us say the order is passed today, that is 11th of November, but the order states that this merger shall be effected backdated from 1st of October. Now the question is, what happens for the transaction between 1st October till date? So what it says, the supply or receipt of goods and or goods between any two or more such company to or from each other. So what is the main point? The main point is the difference date. This order is passed today, 11th of November, but it is made effective from 1st of October. So whatever supplies have happened, or the goods have been received, or there is a supply of goods between two or more such company, in such a case, the date from which the amalgamation demerger is effective, that is the prior date, 1st October, till the date of the order of court tribunal, that is today, that is 11th of November. So this patch, such transactions shall be included. Now the question is, it will be considered as whose supply? It will be included in the turnover of supply or receipt of the respective companies, and they shall be liable to pay tax accordingly. So for this period, the transaction entered into by whoever company, that will be the turnover of that particular company. These companies shall be treated as distinct companies for the period till the date of such order. Now, I'm sure you all know what are distinct companies. So there is a concept of distinct persons. That is a different concept. Here we are talking about distinct companies. So it means they will be treated as two separate companies for the period till date of such order. That is, in my example, up to 11th of November. Registration certificates of said company shall be cancelled only with effect from the date of the said order. It means for the period between 1st October, that is the backdated date of making the amalgamation effective, till the date, that is today, till the order is passed, each company will be deemed to have done transactions themselves, and most important, till date, both the companies are in existence, and the registration certificate shall be deemed to be cancelled only today. So even though this amalgamation was order backdated, but for this interim period, it will be considered that both the companies are two distinct companies. It means maybe in the eyes of company law, they got amalgamated, backdated, but for GST purposes, for taxation purposes, they remain to be separate companies, and they shall be liable to pay tax on their respective supplies. So whoever has made the supplies, that person will be liable, and the company's registration will be deemed to be cancelled, not backdated, but from today. So in short, even though a backdated amalgamation order is passed, the companies will be deemed to be in existence till today, and all the law, that is the GST law, shall apply as if both are two different companies existing till date, that is the date of passing the order. Next is another scenario of liability when a company is under liquidation. Now, this you will find very similar to what you have studied, maybe in company law, maybe in accounts when you are doing accounting of a company under liquidation. So the procedure is more or less very similar. So the liquidator, whoever is appointed for taking over this liquidation process, shall give intimation of his appointment to the commissioner within 30 days of his appointment. So the first step is, so whenever a company is under liquidation, the court appoints a liquidator. This liquidator, on taking the charge, should do what? Within 30 days, he has to connect to the jurisdictional commissioner and intimate the commissioner that, see, this company is under liquidation and I am going to take charge of this company as a liquidator. Now, the commissioner may make such inquiry or calls for such information as he may think fit. Obviously, what type of information the commissioner would be seeking? So the commissioner would be seeking information relating to all the past transactions so that the commissioner at its level may verify whether or not the company has complied with all the GST requirements. So the commissioner shall, after going through all the information records, whatever is made available to the commissioner, will notify the liquidator the amount sufficient to provide for any tax interest penalty payable or likely to be payable by the company within 3 months of receipt of intimation of liquidator. So, liquidator informs the commissioner within 30 days. Commissioner will be asking for various information details. Obviously, this information detail the commissioner is asking from the liquidator as well as internally from its department. On going through the information within 3 months, the commissioner will inform the liquidator that, see, this much amount we are expecting to be the outstanding liability. So you need to keep the tax interest penalty portion amounting to, let us say, 1 CR aside. Now, why this is to be informed? If you remember the liquidation process, so that it is the responsibility of the liquidator to prioritize who will be paid how, and in that, government dues are generally always in the upper sequence. Now, in this particular case, the commissioner shall inform the liquidator the amount so that whenever the liquidator is disposing of the assets and it is paying off all the secured creditors, thereafter, whenever it will come to payment of tax liability, it will have to ensure that whatever assets are liquidated, whatever assets are realized, out of that, a particular portion will go to the towards the GST liability. So for that, the commissioner should intimate the amount and the liquidator should make a provision for that amount. If such tax interest penalty cannot be recovered from company, every director during the period is jointly severally liable to pay it unless they prove that the non-recovery is not attributable to the gross neglect, misfeasance, breach of duty. Again, this part is common. You will find this in company law also, that whenever there is any liability on the company which cannot be paid, then the question is, are the directors of the company vicariously liable for the liabilities of the company? So what does the GST law says? That if the GST dues, which includes tax, interest, penalties, are not recoverable from the company, then it will go to the director of the company, and the directors shall be jointly severally liable to pay these outstanding dues. However, the directors will not be required to pay these dues if the directors are able to prove that such non-payment or non-recovery is not attributable to their mistake. They were not negligent in any of their duties, neither they were conspiring or they were part of any type of misfeasance, or there was no breach of duty. In other words, the director should be able to prove that they have performed all their duties as director in the most diligent and in the most honest manner. If they are able to do this and still there is any outstanding amount, then the directors will not be held liable. Next, now coming to liability of directors of private company, where a tax interest penalty due from a private company in respect of any of these supplies cannot be recovered. Recovered means from the company. The directors of such company during such period again will be held to be jointly severally liable. Now here we are not talking only about the company under liquidation, we are talking about in normal course also. So maybe the company is not under liquidation, but if for any reason the liabilities which is there on the company cannot be recovered, then the directors would be held liable. Yes. So the directors will have to make good the liability. The outstanding tax interest penalty shall be recoverable from the director. Now, what does the provision says? The directors will be jointly and severally liable to pay such tax interest penalty unless they prove that the non-recovery is attributable or sorry is not attributable to their neglect, misfeasance or breach of duty. Now, they will not be liable to pay the tax interest penalty if such private company gets converted into public company and non-recovery pertains to the period before conversion. So, two possibilities. First, it is not getting converted into public company. In such cases, it is recoverable from the director, but the way out or the carve out given in the law is that the director will not be liable to pay if the director proves that it was not his gross neglect or misfeasance or breach which led to such non-recovery. However, if the company has been converted into the public company and if the non-recovery is pertaining to the period before such conversion, again the director shall not be liable. Now from director, we come to the partners. Interestingly, in the eyes of general law, firm and its partners are one and the same. I'm sure you all would have read this, you all know this. However, when you come to taxation law, be it income tax, be it GST, or even the earlier taxation law, service tax, VAT, etc., the taxation laws have always treated the partners distinct from the firm. So, partners and firms are always treated as different persons for the purpose of taxation law. However, whenever there is any outstanding liability of the firm, we all know partners are generally liable at personal level to make good the losses of the firm. So, what is the general scenario? Firm and each of the partners of the firm shall jointly severally be liable to pay the tax interest penalty of the firm. So, first general rule is that even though for taxation purposes, firm and the partners are two distinct persons, two different persons. However, if there is any outstanding liability of the firm, the liability shall be jointly of the firm and the partners. So either jointly they will have to pay or it can be recovered even from one of them, which is severally. Now, interesting to this is this scenario is not applicable vice versa. Vice versa means if there is any liability of the partner, that cannot be recovered from the firm or the other partner jointly or severally. So it is only the liability of the firm. So whatever business is done in the firm's name, whatever is the GST liability of the firm, only that is recoverable from the firm and the partners collectively and also severally. But if the liability of the partner individually, so let us say the partner is also having some business in the individual capacity of the partner. In such a case, if there is any outstanding liability in that business, which is in the individual capacity of the partner, that is not recoverable from the firm or from the other partners. That remains the liability of that partner independently, individually. Next, where any partner retires, he or the firm shall intimate the rate of retirement of the said partner to the commissioner by written notice. Such a partner shall be liable to pay the tax interest penalty only up to the date above intimation given within 1 month of retirement, or the date of intimation if above intimation given after 1 month of the retirement. So what is the point? So if any partner is retiring from a partnership firm, the law has made it obligatory that the partner and the firm, they have to inform to the commissioner about the date of his retirement, and this has to be done in written form. Now, if such intimation is given, not given, then what is the tax implication? That is given. Such partner shall be liable to pay the tax interest penalty we are talking about of the firm up to what date? Up to the date of his retirement if above intimation is within 1 month, or the date of intimation if the intimation is after 1 month. So let us take example. The partner is retiring on 1st of October. Now 1 month is up to 1st of November. So first possibility is partner has informed on 30th of October that he is retiring. Now this intimation is done within 1 month of retirement, because in my example, he retired on 1st of October, intimated on 30th, so it is within 1 month. Now in this particular case, the partner will be liable for all liabilities only up to 1st of October, that is the date of retirement. Second possibility, the partner has intimated this on 11th of November. In this particular case, if he has intimated up to 11th of November, that is today, so this is beyond 1 month, then the partner shall be liable for the outstanding taxes up to 11th of November. So this is what is the point. Is this fine? Now, where business, sorry, this is now liability of the guardians, trustees, etc. So the point is, where business is carried on by any guardian, trustee, or agent on behalf of and for benefit of a minor or other incapacitated person, the tax interest penalty shall be levied and recoverable from such guardian, trustee, or agent. Such tax interest penalty shall be determined, levied, recoverable in a like manner and to the same extent as it would be recoverable from the minor incapacitated person, as if he was a major capacitated person, and as if he were conducting the business himself, and all provisions of GST law shall apply. So, as you can understand, the scenario is that wherever you are carrying on the business, which is not your own business, it is the business of some other person, and you are appointed as the guardian. Why? Because the person is minor, because the person is, let us say, mentally incapacitated to enter into contract. Hence, you are appointed as the guardian. Or let us say, you are the trustee of a business which is carried on by a trust, or you are an agent. In all these cases, you will be responsible towards a tax interest penalty. Such tax interest penalty shall be determined, levied, and recoverable in the same manner and to the same extent as it would be recoverable from the actual owner, who is the minor or the incapacitated person. So, in other words, whatever liability would be levied on the minor or on the incapacitated person, the same would be levied on you, as if the minor or the incapacitated person was a major or was a capacitated person. So this is what is the point, and as if they were themselves conducting the business. So it would be recoverable from you, that is the guardian trustees, and such liability would be determined and recoverable in the like manner and to the same extent as would be recoverable from the minor. Next, liability of court of what? So where the estate or portion of the estate is under the control of court of wards. or administrator general or official trustee or any receiver or manager or any such person appointed by or under an order of court, the tax interest penalty shall be levied recoverable from such court of wards, administrator general, or the official trustee, receiver, manager. So let us say the property of a particular business is now under the court of wards and there is any liability or tax interest penalty recoverable from that property. Now, this liability tax interest penalty will be payable by the court of wards. So, such tax interest penalty shall be determined, levied, and recoverable from the above person in the same manner, same extent as if they were the person who are conducting the business, and the GST law shall apply to them as if they are the owner. So understand this. So whenever there is a scenario where the business or the property is under the control of any of these persons, it would be these persons who would be held responsible, liable in the same manner as if they are the owner of that particular property or business. Now, special provisions regarding liability to pay tax in specific case. First is on death of a person. Now we all can understand that if a person has died and if the person is an individual, so what happens in such a case? The property of the individual will devolve on any of the legal heir. In this particular case, the question is who is responsible to pay the tax after the death of the original taxpayer. So in this case, Section 93 says, if the business is continued after the death by the legal representative or the person on whom the business has been devolved after the death, such legal representative or the person shall be liable to pay tax interest penalty from such deceased person. So, two possibilities. After the death, you have to check whether the legal representative or the other person is continuing the business of the deceased person. If the legal representative has continued the business of the deceased person, then in such a case, the legal representative shall be liable to pay whatever is the tax interest penalty due from such person. Obviously, we are talking about the period before the death of such person. Second possibility, the business is discontinued. Now, after the death, the legal heir decide to dissolve and to discontinue the business. So they will not be continuing the business for any period of time after the death. In such a case, the legal representative is still liable for the interest penalty, but only out of the estate of the deceased person and also to the extent to which his estate is capable of meeting the outstanding amount. So what is the difference in the two scenario? In the left hand side, where the business is run, continued by the legal heir, legal representative, then they will be liable for the total liability irrespective of what is the property they have received from the deceased person. In other words, they may be liable, they will be held liable to pay this tax from their personal property also if required. However, in the second scenario, where this business is not continued by the legal heir, in such a case, the legal heir, the legal representative, will not be liable to pay tax out of their personal property. They will be liable to pay tax only to the extent to which they have received the property of the deceased person, and only to that extent they will be held liable. So if there is any excess liability, that excess liability shall automatically be waived. The successor shall be liable to pay any outstanding tax interest penalty due from the transferor in case of transfer of business due to that of the sole proprietor. So similar point. So where it is a proprietorship firm and there is a successor who is taking over this firm. So this successor will be required to pay the outstanding tax interest penalty, which is payable by the transferor in case the business has transferred due to the death of the sole proprietor. So in short, here, since this successor is continuing with the business of the proprietor, the successor is responsible for the liabilities. Next, on partition of property or HUF or AOP. Now there is a Hindu undivided family. I'm sure you all would be knowing this concept is flowing from the Hindu Succession Act, whereby where there is a husband, wife, and a child. Child may be a daughter or a son. The law envisages the concept of Hindu undivided family if either there is any property which has been inherited by this HUF, or if there is any property which is gifted to this HUF. So this leads to the creation, this leads to the coming into existence of HUF. Similarly, we know what is AOP. So AOP is association of person where two or more person who may be individuals, who may be companies, partnership firms, any of these, they come together for a common purpose and they are not entering into any formal setup like a partnership, like a company or any such thing. So something like a joint venture. So where two or more persons form a joint venture, we call this joint venture as AOP. Now, till the time they are in existence, they are running the business, they are liable to pay the tax. However, on the dissolution of this HUF or AOP, what we normally call as the partition of HUF, in such a case, where the property of the HUF AOP is partitioned and divided amongst the members, then each member shall be jointly, severally liable to pay tax interest due at the time of partition. So, when on partition, the property is distributed among the members of the HF or of the AOP, every member is liable individually also, jointly also, to pay the tax interest penalty which is applicable at the time of the partition. Dissolution of the firm. Where a partnership firm is dissolved, then every partner is held liable jointly, severally, to pay the tax interest penalty due up to the date of dissolution. So these are the different special case scenarios under which the liability of one person, who may be a company, who may be an individual, who may be a partnership, is dwelling upon the counterparts. Like in case of company, it may be the directors. In case of firm, it is the partners. In case of individuals, it is their legal representatives. So these different specific scenarios that we discussed here, in these scenarios, the liability of one person is payable, is recoverable from some other persons. Now we move on to the second chapter for revision. The chapter deals with offenses and penalties and some ethical aspects under the GST law. Now we all understand what are penalties. So penalty is type of a monetary punishment which is levied upon a person who has committed some wrong. This wrong is what is called as an offense. So offenses generally mean a violation or a breach of law. And most importantly, it is such a violation which is punishable under the law by way of penalty, fine, imprisonment, etc. Now, importantly, every mistake under the law is not an offense. You have to understand this. So let us say you fail to raise an invoice, you fail to file a return in time, you fail to apply for registration within 30 days. All these are mistakes under the law. All these are, you can say, to some extent, violation of the law, breach of the law. But are they punishable by way of penalty, fine, imprisonment? If yes, then only such wrongdoings, such breach will be considered as offense, otherwise not. Now, the quantum of penalty depends upon the intention. This is what is called as mens rea. Now, whenever you have to levy any penalty or you have to impose any severe punishment, including imprisonment, at such times, the law requires that there should be an intention to wrong do or to breach or to violate the principle. If something has happened mistakenly without you having the wrong intent to do that, then we say there is no mens rea. You did not have a guilty mind, and in such cases, there should be no penalty. So, while committing an act, if there is a culpable mental state wherein the act is done intentionally, the act and its implication are well understood, and also the act is within your control. The person committing the act was not coerced, so nobody forced the person, and even overcome hurdles to the act committed. Most important, the person believes or has reason to believe that the act is contrary to law. So, when all these things are present, we say that whatever act is done with a culpable mental state. In simple words, mens rea is present. So this is how the law identifies key in which case there is mens rea, so it is liable for penalty. Then comes prosecution. What is prosecution? Prosecution is the institution of legal proceedings. So when the law provides for starting of a legal action against the person, which will obviously include the imprisonment of the person, then such act or then such a provision is called as a prosecution provision. So what it says, it is the institution commencement of legal proceedings, the process of exhibiting formal charges against the offender. So whereby you are formally putting a charge, formally putting a type of a punishment on a person and treating that person as a guilty person, offender. That is what is prosecution. Section 198 of the Criminal Procedure Code defines prosecution as institution and carrying of the legal proceedings against a person. So, to institute the prosecution, offenses are classified. Now, this is important into cognizable, non-cognizable offenses. What are cognizable? See, cognizable is derived from the word cognizance. Cognizance means to take, uh, what you can say, cognizance is where the officer who is taking action can himself determine that yes, this person is guilty. That is what is the officer is taking cognizance of that offense. That is where such offenses are called as cognizable offenses, which are also non-bailable offenses. So, as written in the bracket, some serious category of offenses where the officer himself is empowered to take the action. Such offenses are cognizable, that is, the officer will himself determine the liability, will himself take cognizance of that particular offense, then it is a cognizable offense. What is a non-cognizable offense? In case of a non-cognizable offense, the officer himself cannot take the action. The officer will require a permission or a warrant from a higher authority. Only then the officer will be taking an action. So that is what is the difference. Non-cognizable. So cognizable offenses are non-bailable and non-cognizable offenses are bailable. Now, the chapter 19 deals with offenses and penalties, which covers section 122 to 138, and it covers the various provisions relating to offenses, penalties, detention, seizure, etc. Similarly, wide section 20 of the IGST Act, the provisions of penalty and offenses of CGST Act are also made applicable. Now, let us go through these for penalty and offenses. Now, in this list, we'll understand which actions are considered as an offense and liable to what penalties. So, firstly, we are reading penalty for certain offenses. Now, what is the penalty given and what are the offenses? Let us understand. So, section 122, subsection 1 says, where a taxable person, first, what the person has done, has supplied goods or service without issuing an invoice or issues an incorrect or false invoice with regard to the supply. So what is the first offense? You are selling goods, but you are not preparing invoice. So it is like what we call as a black sale, a transaction where you are selling but not preparing invoice so that you don't have to pay the tax. So you are doing it for evading tax. Second scenario is where you are issuing the invoice, but there is no supply of good services. Now, this is strange. Why will a person make an invoice? Because the moment the person is making invoice, the person will be liable for tax. But such transactions are called as fake billing transactions, where there is no transaction at all. But just because the opposite person wants to make some adjustment in their books, I am giving them an invoice even though there is no supply made by me to that person. Now, generally, this has come up from income tax law. How it has come up from income tax law? So, in income tax law, let us say you are preparing your income tax return and you find that there is a huge profit in your business. So, obviously, there will be huge income tax liability. Sorry. Now, you do not want to show that amount of profit and pay that amount of liability. So what is the recourse available to you? The recourse available to you is trying to show bogus expenses, fake expenses. Now, when you want to show a bogus expense, a fake expense means an expense which actually is not there, but you just want to show that. So to that extent, your profits are reduced, your tax is reduced. What you will do, you will try to look out for a person who is ready to give you an invoice for any expense so that you can book that invoice as an expense. So let us say you find me and I say, okay, I will give you an invoice showing that I have provided you some technical services or I have provided you any type of consultancy services. I give you an invoice. This invoice which I am giving you, which is not backed up by any actual supply of service. So in reality, I have not given you any service, but only I have given you the invoice. In such a case, the invoice which I have given to you, without there being any underlying supply of goods or service, this becomes a fake invoice, a bogus invoice, and issuing such an invoice without there being actual supply is also a punishable offense. So first was there is supply but no invoice. This people do so that they don't have to pay tax. Second is there is no supply, only there is invoice. This people do because they want some adjustments, and for those adjustments, they are only preparing an invoice without there being a transaction. Third, collects any amount as tax, but fails to pay the same to the government beyond the period of 3 months. Now, what is this point? Let us say your goods or service is exempt under GST. Now, maybe unknowingly, you don't know this fact. So, while selling those goods, while providing those service, you make a tax invoice, and in that tax invoice, you have charged GST. Now, this is not correct, but if let us say you have done this by mistake, the law says okay. So if you are collecting any amount which is tax or which is collected by the name of tax, whether or not it is tax, it is your responsibility to deposit it with the government first. ठीक है. Even if it is not tax, why? Because it was exempt. We will go for refund later on. But the first step is to apply for or to deposit the tax to the government. If you don't deposit such tax and a period of 3 months has passed, then there is a problem. And then in that particular case, you will be required to pay penalty. So if you have collected in your invoice any amount by calling it as tax, CGST, SGST, IGST. So you are showing the amount as tax. In that particular case, you will have to deposit the tax with the government. Next, offenses collect any tax in contravention of the provisions of this act, but fails to pay the same to the government beyond a period of 3 months. So similar point. So you have collected any tax which is in contravention. So here, even though you have collected the tax wrongly, but since you have collected it by the name of tax, you have to pay it. Next, fails to deduct the tax in accordance with the provisions of TDS under section 51 or deducts an amount which is less than the amount required to be deducted or fails to pay the amount. So wherever TDS was applicable, if TDS is not done or you have done it at a lower amount or you have not deposited the tax. In all these three scenarios, it is an offense. Similarly, where TCS was to be done, so tax was required to be collected and it is either not collected or it is collected at a lower amount or after collection it is not paid. So both TDS, TCS, if not collected, deducted or after collection deduction not paid, both are offenses. Next, the person has taken or utilized input tax credit without actual receipt of goods or either fully or partly in contravention of the provisions. So where there is no actual purchase. So again, what you have done, you have taken the fake invoice from someone. So the person who is giving fake invoice is also offense in the above category. And here, if on the basis of that fake invoice, you have taken the input tax credit of that fake invoice, that is also an offense. So again, understand this, wherever you are either raising a fake invoice or other person is taking the credit of that fake invoice, both persons are said to have done different types of offenses and both are liable to penalty. Next offense is where you have taken a wrong refund and it has been done by resorting to fraud. Now, how can you resort to fraud and take a wrong refund? You have given fake details. You have actually not exported, but you have given fake proofs of export. You have actually not done the transaction which is eligible for refund, but you are showing or claiming that it is a transaction eligible to refund. Such cases are fraudulent obtaining of refunds and it will be liable for penalty. Next, the person has taken or distributed ITC in contravention of section 20, which is the provision for So wherever the person has distributed the credit wrongly and the person is the head office who is registered as an input service distributor, that is ISD, the provisions of section 20 and the relevant rules are applicable, which requires that you should only distribute that credit which the ISD has received. It should not or it cannot distribute any amount more than that. If it has done that, it will be in contravention and it will be penalty liable. Next, what the person has done? The person has falsified or submitted financial records or substituted financial records or produced fake accounts or furnishes any wrong information or wrong return with the intention to evade tax. So wherever you are either falsifying your records accounts or you are maintaining a parallel account. So for your records, your accounts are different, but for what you have to give to the government, you have prepared separate records. It means it is a clear-cut case of fraud whereby you are producing different accounts, fake accounts to the government. Similarly, if you give any false information or you have filed a return which you know to be false, and behind all this there is an intention to evade payment of tax, it will be leviable to penalty. Next, where the person was required to be registered because you crossed the threshold of 24 or you entered into any transaction, sorry, you crossed the threshold of 22 or entered into any transaction of 24, you are liable to be registered. If you fail to take registration, despite of being liable, it is again a case of offense. Next, you have furnished any false information with regard to registration particulars, either at the time of applying for registration or subsequently. Now, we all know that while registering, you have to provide with certain details documents. Now, if these details documents are found to be false, again, the registration that you have obtained will be an offense. Next, if you are obstructing or preventing any officer from discharging their duty, if you are transporting any taxable goods without the cover of documents, that is, without having proper invoice, delivery challan, etc., if you are suppressing your turnover, which leads to evasion of tax, if you fail to keep, maintain, or retain books of accounts and other documents in accordance with the provisions of this Act or rules, if you fail to furnish information documents called for by an officer in accordance with the provisions of this Act or rules, if you supply, transport, store any goods which you know are liable to confiscation. Next, you are issuing an invoice documents by using the registration of some other person. So you are falsifying the invoice by using somebody else's registration. Next, you tamper with or destroy any material evidence. So if there is any document evidence in your control, in your custody, and you are destroying it or you are tampering it. Next, dispose of or tamper with any goods that have been detained, seized, or attached. Now we all know that whenever goods are detained, seized, or attached, they are the custody of the government. They are the indirectly property of the government. Now, if for such goods you are either disposing them off or you are tampering with the goods, in such cases you will be held responsible and you will be liable for penalty. Now, how much is this penalty? So, above was the list of offenses. The penalty is he shall be liable to pay a penalty of 10,000 rupees or the amount which is equal to tax evaded or not deducted or short deducted or deducted but not paid, not collected, short collected, collected but not paid, or the input tax which is availed or passed on. This amount, whichever is higher, that is 10,000, or the amount of tax, TDS, TCS, ITC, whichever is higher is what is the amount to be paid. Now, besides this, the next part is, now this second part is very important, where a person who retains the benefit of a transaction covered in the above clauses and at whose instance such transaction is conducted shall be liable to a penalty of an amount equal to the tax evaded. Now, in the above clauses, we have seen different types of penalty where either goods are supplied without making invoice, or invoice is prepared without supply of goods, or wrong ITC is taken, or wrong ITC is passed on. Such cases where an outsider is retaining the benefit of the transaction. So in the first subsection, you are entering into those transactions. In this subsection, there is a person who is retaining the benefit which is arising from such transaction. In such a case, the person shall be liable to penalty of an amount equivalent to tax evaded. This is if the person has retained the benefit of the transaction covered above. Next, if you are an e-commerce operator who allows supply of goods or service through it by an unregistered person other than the person exempted from registration. So we all know that whenever somebody is supplying good service from an e-commerce operator, if the e-commerce operator is liable to pay tax, no problem. But if the supplier is liable to pay tax, the supplier has to get registered. Now, the e-commerce operator is allowing an unregistered person to sell the good service from its portal. Then the e-commerce operator will be liable as a defaulter and penalties invocable. Next, e-commerce operator allows interstate supply of goods or service or both through it by a person who is not eligible to make such supply. Now, who is the person who is not eligible to make such supply? It is the composition dealer. So, where an e-commerce operator allows a composition dealer to make interstate supply through that e-commerce operator app, the e-commerce operator is liable for penalty. Next, the e-commerce operator fails to furnish the collect details in the statement to be furnished under subsection 4 of 52, that is the TCS returns or the TCS statement. If the e-commerce operator is furnishing incorrect details or is not furnishing the details, then it will be liable for penalty. How much is the penalty? Again, it is 10,000 or the amount of tax, whichever is higher. Next, a registered person who supplies goods, service, or both on which any tax has not been paid, short paid, erroneously refunded, or where ITC has wrongly availed or utilized. So you have either not paid the tax or less paid the tax, taken wrong refund, or you have taken ITC. Then in such cases, if such thing is happening because of any reason other than fraud, so it has been done by mistake, not by fraud, then you shall be liable to a penalty of 10,000 or 10% of the tax due, whichever is higher. But where the same thing is done for reason of fraud or willful statement, etc., then you will be liable to a penalty of 10,000 or the tax due, whichever is higher. So if it is a fraud or non-fraud, that decides the quantum of penalty. So if it is a non-fraud scenario, it means that payment, wrong refund happened by mistake. The maximum penalty will be 10% of tax. But if it is done fraudulently with the intent to evade tax, then in such cases, it will be leviable to 100% penalty. Next, a person who aids, abates any of the offenses specified in the above clauses. So now you are not doing the above offenses yourself. You are not retaining the benefit, but you are helping someone do the offense. you are abating someone do the offense, you are also equally responsible. Next, what has the person done? Acquired possession of, or in any way concern himself in transmuting, removing, depositing, keeping, concealing, supplying, purchasing, or in any other manner, deal with goods which he know or has reason to believe are liable for confiscation. So, where the goods are such that they are liable for confiscation, you are not supposed to acquire them or transport them or keep or conceal them. But if you do this, you're liable for punishment. Next, if the person receive or is in any way concerned with the supply of or in any other manner deals with any supply of service which he knows or has reason to believe are in contravention of any of the provisions of this act or rules. So either you are receiving or you are supplying in contravention of the act, then such receipt or supply will be considered as offense. Fails to appear before the officer of central tax when issued with a summons. So if summons are given to you, it is your duty to be present and also to produce the necessary document which is asked for. Next, fails to issue invoice in accordance with the provisions of this act or rules made thereunder, or fails to account for an invoice in his books of accounts. So, wherever the person fails to give invoice as required by the provisions or fails to record that invoice in the books of accounts. In all these cases, they shall be liable to a penalty which may extend to 25,000 rupees. So you can say this is like a generic penalty. So for all these cases, the penalty is not equal to tax. It is the generic penalty of 25,000. So section 122, which levies penalty. Who are the persons on whom the penalties are levied? 122.1, all the clauses levies penalty on taxable person. 1A levies penalty on any person. 1B is for e-commerce operator. 2 is for registered person, and again 3 is for any person. Now, what are the penalties? 122.1 has listed out 21 penalties, and the penalty is 10,000 or the amount of tax, whichever is higher. Obviously, if it is IGST law, it will be 20,000 or the tax, whichever is higher. Then what are the specified offenses? Section 22.1 gives a list of 21 different offenses which can be divided into following categories. First, offenses related to invoice, offenses related to tax evasion relating to TDS, TCS, and offenses relating to ITC or refund, or related to records, books of accounts, or related to registration or transportation, storage, and others. So this is how you can bifurcate those 21 offenses. Now, we have studied all this above. What are the other provisions? Penalty for failure to furnish some information which is required to be furnished in the form of information written. So, the law provides that certain entities, certain persons are required to file a separate written called as information written. If you fail to do that, that will also attract penalty. Then fine for failure to furnish statistics. So where you are required to furnish any information or return as per section 151 and you have failed to furnish such information or return, or willfully furnishes to furnish any information or return which you know to be false. So either you have not furnished the information or you have given false information, then your penalty is up to 10,000. If this information is continuing, then the penalty is 100 for each day or 25,000, whichever is lower. So this is what is the penalty. Then comes the general penalty of rupees 25,000. So what is general penalty covers? Where you commit any offense which is not covered above. So what is not covered above is all the regular mistakes that happen. So you have not prepared the invoice by showing all the details. You have not filed the return in time, you have taken registration late. All these are general mistakes for which there is a general penalty of 25,000. Next, this section is very, very, very important. What it deals with? It deals with some principles or rules whenever penalty has to be levied. So it is like a guideline given to the department or the officers that when they should not levy a penalty. So the levy of penalty is subject to certain disciplinary regime, which is based on jurisprudence, principle of natural justice, etc., etc. Such general principle is given in 126. What it says? Now this is, you can say, instruction to the department. No penalty shall be imposed by an officer under this act for minor breaches or procedural requirements or omission, mistake in documentation which is easily rectifiable and made without fraudulent intent. Now, why this is included? I'll give you example. So, over above, there was the first penalty where you are supplying goods but not giving invoice. Now, this is an offense given above. But what if the tax amount involved in that invoice is only rupees 10? Will you still consider it as a offense? Obviously, the answer is no. So what this particular provision is trying to say that when you want to impose any of the above penalty, see whether the quantum, the amount involved is significant or it is a minor breach. Similarly, see whether there is any procedural requirement of the law which has been breached. So you should not impose penalty merely for any procedural lapses. So whenever you are required to file return, and let us say the person is delayed by only 2 days, after that the person applied for the registration by itself. In such a case, you cannot say that merely because you could not apply for registration within time and since you are late only by 2 days, there is some severe offense. So these are some important instructions that for minor breaches, for some procedural lapses, or any omission or mistake in documents which is easily rectifiable and it is done without any fraudulent intention or any gross negligence. Such minor breaches should not be liable for penalty. Now the question is there any parameter for deciding the minor breach? Yes. If the amount of tax involved is up to 5,000. So this is the first criteria. Next, omission or mistake in document means what? It shall be considered to be easily rectifiable if the same is apparent. Like many times, while preparing invoice, you have two clients by the similar name. So instead of writing first client's details, you have written the second client's details. Or while putting the GST number, you have made error in one digit of the GST number. Many times such error happens while writing the address or PIN code, or such error happens while writing the HSN code, which are apparent from the face of the record. Such mistakes are not to be considered as severe offenses. Second instruction is penalty imposed should depend on the facts and circumstances of each case and should commensurate with the degree and severity of breach. Means what? You should not impose penalty mechanically. You should be considerate of the nature of mistake, the gravity of mistake. Simply because the person has committed mistake, this itself should not be sufficient to invoke penalty provisions until unless you have proof that this person is a regular offender, this person has intention of always breaching the law. Until unless you have this, you should not levy penalty. No penalty shall be imposed any person without giving an opportunity of being heard, that is show cause and proper hearing in the matter, affording an opportunity to the person is given. The officer under this act, while imposing penalty in order for a breach of law, regulation, procedural requirements, specify the nature of breach and the applicable law, regulation or procedure under which the amount of penalty has been specified. So it is important that If you want to impose any penalty, you have to specify. Firstly, the above point said you had to give show cause. Now, in this show cause, you have to clearly specify ki what is the mistake, what is the wrongdoing that I have done. Secondly, it is wrong as per which law, under which section. If the show cause does not specify this, then again the penalty will not be leviable. Where a person voluntarily discloses to an officer under this act the circumstances of a breach of tax law, regulation, or procedural requirement prior to discovery, the proper officer may consider this fact as a mitigating factor. So, before the officer identified, you yourself inform the officer that, see, I have done this mistake, this happened inadvertently, then the officer should consider this fact and should not levy a severe penalty. Next, provisions of this section shall not apply in cases where the penalty specified under the Act is either a fixed sum or expressed as a fixed percentage. For instance, penalty under 125 is being prescribed as up to 25,000, means neither a fixed sum nor as a fixed percentage. Hence, general principle under 126 should be considered while imposing any penalty. Now, what are the other cases for imposing penalty? First, assessment of non-filer of returns. Now, in this particular case, a person who is not filing returns and it is done for a continuous period of time, such person is called as non-filer. There is penalty on such person. Assessment of unregistered person, which means you are required to be registered but you did not take registration. So definitely this is an offense. Summary assessment in some special cases. Now, when summary assessment happens, when the person is not responding, I have sent show cause, it is not providing me details. I have given SMT10, it is not giving me reply. So, in all such cases where the person is not responding, summary assessment is done. Again, it attracts penalty. Determination of tax not paid, short paid, error necessary, refunded, ITC wrongly available utilized for any reason other than fraud, and secondly, for reason of fraud. Detention, seizure, and release of goods and conveyance in transit under Section 129 means e-waybill cases, and confiscation of goods, conveyance, and levy of penalty under 130. If the proper officer is of the view that such person is liable to a penalty, he may issue an order levying such penalty after giving a reasonable opportunity of being heard. Power to waive penalty or fees or both, the government may by notification waive in part or full the above penalties. Now coming to different specific penalties. Now 129 is generally the e-way bill related penalty. So what is the heading? Detention, seizure, and release of goods and conveyance in transit. Now what it says, कि whenever you are moving the goods, so whenever there is movement of goods, the law has created certain provisions called as e-way bill, which you have to comply with. If you have not complied with such provision and on the road your vehicle is intercepted, it is stopped, and when it is checked, it is found that you are carrying goods where there is no proper documents, no proper e-way bill, then in such cases, your goods and the conveyance are liable to detention, seizure, or after detention or seizure, liable to be released. How? On payment of penalty equal to 200% of the tax or 25,000, whichever is less, where the owner of the goods comes forward. On payment of penalty equal to 50% of value of goods or 200% of tax payable, whichever is higher. And in case of exempted goods, on payment of an amount equal to 5% of the value of goods or 25,000, whichever is less, where the owner of the goods does not come forward. So two categories, where the owner comes forward or the owner does not comes forward. And then upon furnishing a security equivalent to the amount payable under AB in such form and manner, provided that no such goods conveyance shall be detained seized without serving an order of detention. The proper officer detaining seizing the goods conveyance shall issue a notice within 7 days of the detention, and thereafter pass an order within a period of further 7 days of service of such notice. No penalty shall be levied under subsection 3 without giving the person an opportunity of being heard. No payment of amount referred to in subsection 1. All proceedings in respect of notice in subsection 3 shall be deemed to be concluded. Where person transporting any goods or owner of goods failed to pay the amount of penalty under subsection 1 within 15 days from the date of receipt of copy of the order under subsection 3, the goods conveyed so detained shall be liable to be sold disposed of. So this entire is the e-way bill related penalty where you are given the procedure to be followed before and after the levy of the penalty. Now this is very severe. 130 penalty. What it says? Confiscation of goods or conveyance and levy of penalty. Where any person supplies, receives any goods in contravention of any of the provisions of this Act rules with the intent to evade payment of tax. So first is when your goods are liable to be confiscated, where you are supplying or receiving goods in contravention of the provision with intent to evade tax. Now, what could be in contravention? So you are supplying without raising invoice, or you are not reporting these goods in your returns. This is with intent to evade tax. Second, does not accounts for any goods on which he is liable to pay tax. So whatever goods are liable, you have not recorded them in your books. Supplies any goods liable to tax under this Act without having applied for registration. Contravenes any of the provisions of this Act rules made thereunder with the intent to evade payment of tax. Or uses any conveyance as means of transport for carriage of goods in contravention of provisions of this Act. Since such goods conveyed shall be liable to be confiscated, person shall be liable to penalty under section 122. Where confiscation of goods conveyance is authorized by this Act, the officer adjudging it shall give to the owner an option to pay in lieu of confiscation fine as the officer thinks fit. So, firstly, we saw when your goods are liable to be confiscated when any of the above offense happens. Subsection 2 says, instead of confiscating the goods, the officer will give you an option that, okay, I'm not confiscating your goods, you pay me this much amount as penalty. So where the officer makes the payment, demands the penalty, then you have a choice of giving that penalty or fine so that your goods are not confiscated, provided that such fine leviable shall not exceed the market value of goods. Fine. No order of confiscation of goods or conveyance or for imposition of penalty shall be issued without giving the person an opportunity. When any goods conveyance are confiscated, the title of such goods conveyance shall thereupon vest in the government. The proper officer adjudging confiscation shall take and hold possession of things confiscated, and every officer of police, on the requisition of such proper officer, shall assist in him taking the possession. The proper officer may, after satisfying himself that the confiscated good conveyance are not required in any other proceedings under this Act, and after giving reasonable opportunity, not exceeding 3 months, to pay fine, dispose of such goods conveyance. So after confiscation, once the purpose is over, and after giving reasonable time and also opportunity to pay fine, the officer may finally sell off your goods conveyance. Next, confiscation or penalty not to interfere with other punishments. So without prejudice to the provisions contained in the Code of Criminal Procedure, no confiscation made or penalty imposed under the provisions of this Act or rules made thereunder shall prevent the infliction of any other punishment. So if any other punishment is applicable besides the present punishment, this particular provision of confiscating goods or levying penalty will not disentitle the officer from taking the other action. So it means the other action will also be possible besides confiscating your goods or levying penalty. Now, punishment for some other offenses. Whoever commits or caused to commit and retain the benefit arising out of any of the following offenses. What are they? Supply goods or service or both without issuing invoice, issue an invoice without supply of goods, avails ITC using invoice in clause B, that is without actually receipt of goods, collect any amount of tax, means you are collecting an amount by the name of tax but not depositing it with government, evade tax or fraudulently obtains refunds, and where such offense is not covered above, falsifies or substitutes your records, acquires possession of or in any way concern himself in transporting, removing, depositing, etc. goods which you know are liable for confiscation, receives or is in any way concerned with supply of or in any other manner deal with supply of service which you know or have reason to believe are in contravention, or attempts to commit, abet the commissioning of the offense. Now, if any of the above thing happens, you are punishable. In case where the tax evaded or amount of input tax rate allowed utilized exceeds 500 crores with imprisonment of a term which may extend to 5 years. So where the above offenses are committed and the value or the tax involved in the offense is exceeding 5 crore, 500 lakh is 5 crore, then imprisonment is up to 5 years. If it is exceeding 2 crores but not 5 crores, the imprisonment is up to 3 years. If it is exceeding 1 crore but not 2 crores, the imprisonment is up to 1 year. So there are three categories: above 5 crores, 2 to 5 crores, 1 to 2 crores. In case where he commits or abates the commission of an offense specified in clause F, he shall be punishable with imprisonment of a term which may extend to 6 months. Now, where any person convicted of an offense under this section is again convicted of the offense, he shall be punishable for the second and every subsequent offense with imprisonment of a term of 5 years. So, first time you will see the limit above 5 crore, 2 to 5 crore, above 1 crore. But thereafter, on repeat offenses, even for a smaller amount, you will still be using the 5-year imprisonment provision. The imprisonment referred to in above clauses shall, in the absence of special and adequate reasons to the contrary, be recorded in the judgment be for a term not less than 6 months. So instead of that higher term, you can give imprisonment of 6 months. Notwithstanding anything contained in Code of Criminal Procedure, all offences under this Act, except the offences referred to in subsection 5, shall be non-cognizable and bailable. Offences specified in A or B or C or D and punishable under clause I of that subsection shall be cognizable. So, other than this, remaining are non-cognizable. Person shall not be prosecuted for an offense under this section except with the prior sanction. So, until unless the commissioner sanctions, you cannot take the above action of arrest. For the purpose of this section, the term tax shall include the amount of tax evaded, amount of input credit wrongly availed, utilized, refund wrongly taken under the provisions of this Act, the SGST, the IGST, the UTGST, or even the Compensation Cess Act. So these are the provisions relating to imprisonment. Liability of officers and other persons. Where any person engaged in connection with collection of statistics under 151 or compilation, computerization thereof, or if any officer of central tax having access to information specified under subsection 1 of 50, or if any person engaged in connection with provision of service on common portal willfully discloses the information. So if in any of the above section you have acquired information, and if you are willfully disclosing the information or the contents of any return, otherwise than in execution of your duties or for the purpose of prosecution for an offense under this Act, you shall be punishable with an imprisonment which may extend to 6 months or with a fine which may extend to 25,000 or both. A person shall be prosecuted for an offense under this section in case of government service with the previous sanction of government and other than government with previous sanction of commissioner. Cognizance. No court shall take cognizance of offence punishable under this Act or rules made thereunder except with the previous permission of commissioner. So, Without Commissioner's permission, above offences cannot be taken cognizance, and no court shall interfere inferior to the that of magistrate of first class shall try such offence. Most important point. Section 135 says what? We have read at the start. Then in order to levy punishment penalty, it should be proven that you have a guilty mind. Just a minute, students. Yes. Now we had studied at the start that in order to levy penalty, it should be proven that the person is having mens rea, that is a culpable mental state. Now, important is an explanation 1 to section 135. The expression culpable mental state includes intention, motive, knowledge of the fact, belief, or reasons to believe. Now, what is important is it shall, however, be a defense for the accused to prove the fact that he had no such culpable mental state. So, firstly, the law is presuming that there is a culpable mental state, which means you had the belief, you had the knowledge, you had the intention of doing that fault. So this is what is an important presumption. So the law presumes firstly that whenever any offense is committed, it has been done purposefully and there was mens rea. However, the law provides you that you have the option of proving otherwise. That is, you can prove that there was no culpable mental state. But the first thing is, law is presumed. It means it is up to you to prove that there was no such mens rea. Relevancy of statement under certain circumstances. A statement made and signed by a person on appearance in response to summons under Section 70 during the course of inquiry proceedings under this Act shall be relevant for the purpose of proving the truth of the facts which it contains in any prosecution for an offense. So, whenever you are asked to make a statement in the case of a summons, then whatever statement you have made, that statement will be considered as relevant. Important. When a person who made the statement is dead or cannot be found or is incapable of giving evidence or is kept out of the way by the adverse party or whose presence cannot be obtained without an amount of delay or expense under the circumstances the courts consider unreasonable, or where the person who made the statement is examined as the witness in the case before the court and the court is of the opinion that having regard to the circumstances, the statement should be admitted. So first, if the person is present, then the court will examine and then his statement will be admitted. So what the court examines, the court simply asks, did you make the statement in your full senses and it was not obtained from you by any coercion, etc. If you say yes, the court accepts. In case the person is dead or is not found, or the person is not in the position to give any evidence. Why? Because the person is, let us say, captivated. In such circumstances, the court may still consider the statement of the person valid. Offenses by the company, where any offense under this act has been committed by a person being a company, means a body corporate and includes a firm or AOP. Every person who at the time the offense was committed was in charge of and was responsible to the company is also held guilty. That is why we saw in the previous chapter that the directors are also liable. So, whoever is the person who is in charge for the affairs of the company, because we all know company is not a living person. So, company itself is not doing offense. It is some person of the company who is in charge, who is having power, and that person is doing the offense. So, that person is also liable to be proceeded against. However, where an offense is committed by a company, it is proved that the offense has been committed with the consent, connivance, or is attributable to negligence on the part of director, manager, secretary, such director, manager, secretary shall be deemed to be guilty. So, in simple words, the person in charge who was handling, managing the affairs of the company at the time the offense was committed is held liable, responsible. Further, where an offence under this Act is committed by a taxable person being partnership, LLP, HUF, or a trust, the partner, karta, trustee shall be deemed to be guilty. So understand this. All these are entities, organizations. So they themselves are not uh, engaged in any type of offense. It is some person who is doing that. So those persons are held responsible, liable. Compounding. So what is compounding? Compounding is clubbing two or more offenses. So any offence under this act, either before or after the institution of prosecution, be compounded by the commissioner on payment by the person accused of the offence to the central government, state government, as the case may be, such compounding amount in such manner as may be prescribed. So compounding is like we will club all the offenses and you have to pay one lump sum amount. So instead of independent penalties, we will pay one single penalty, which will be a lump sum. Provided that nothing contained in this section shall apply to a person who has been allowed to compound once in respect of any of the offences in these clauses, person who has been accused of committing any offences under these clauses, who has been convicted of offences under these clauses, and any class of person or offences as may be prescribed. So for these, compounding is not allowed. Amount of compounding of offences under this section shall be such as may be prescribed, subject to the minimum amount not being less than 25% of tax involved and the maximum amount not being more than 100% of the tax. So when you are compounding, you can reduce it, but it should not go below 25%. On payment of such compounding amount, or as may be determined by the commissioner, no further proceeding shall be initiated. So once the amount is decided by the commissioner and paid by you, that will be considered as full satisfaction of all the outstanding, and that will now be considered as conclusion of all the proceedings. So this is all about the chapter relating to penalties. Now we come to ethics. What is ethics? So basically ethics is when law has not expressly said something, but it is your moral which requires you to act in a honest manner. That is what is ethics. Now, ethics are fundamental to the effective functioning of any system, specifically the taxation system. Because, see, we are having the self-assessment regime. You know more about your transactions. You have all the documents records. So it is by default your responsibility that whatever you do is ethical. So until unless you have an ethical behavior, it may unnecessarily lead to complications and litigation. Role of chartered accountants in ensuring ethics. Now, please understand, many times the client is filing the returns or doing everything on the guidance consultancy of the chartered accountant, or for that matter, a cost accountant or any lawyer or any professional. So this point applies to everyone. What it says that we as chartered accountants are governed by code of ethics laid down by ICAI. Now we need to compulsorily strictly abide by the by these code of ethics, and these code of ethics are made so that we act in an honest, fair, and professional manner. Our fundamental principles are integrity, objectivity, professional competence, due care, confidentiality, etc. So we need to follow this, and as chartered accountants, we should ensure that our clients, to the extent we are having their information and knowledge, they are filing the returns in the most honest manner, and we should always guide our clients about the ethical behavior, and we should ensure that our clients are always completely disclosing all the relevant facts. Now, a CA in practice will be deemed to be guilty of misconduct under Clause 7, Part 1 of Second Schedule if he does not exercise due diligence, grossly negligent in the conduct of professional duties. Further, as per Clause 8, Part 1, Second Schedule, the chartered accountant in practice shall be deemed to be guilty of professional misconduct if he fails to obtain sufficient information which is necessary for expression of an opinion. So we have this code of ethics which gives you a detail of what should and what should not be done. Next, certification reports to be furnished by chartered accountants. So there are many certificates under the GST law which are required to be furnished by us at the time of refund, etc. So we have to ensure that whenever any of these reports are filed only on the basis of authentic information which is gained by us, and we have to ensure that these reports, these certificates are duly verified. So these are the sections of the act where we as chartered accountants are required to give certificates. What is important is in all these sections we need to ensure that we follow the professional ethics, the code of ethics provided. Fine. So we have completed this chapter. So over here we take the break and we rejoin after 15 minutes at 8 o'clock. So we have our 15 minutes. Now, the next topic for our revision is appeals and revision. Now, what is appeals and revision? Understand this, that first step is that the taxpayer will do his self-assessment. After the taxpayer has done self-assessment, the second step is that the department will make their assessment, their adjudication, their scrutiny. And after the department has done their adjudication, their scrutiny, whatever order is passed by the department, this order may or may not be acceptable to the taxpayer. Now, where any order is passed by the department and the order is not acceptable to the taxpayer, the option available with the taxpayer is contesting or challenging this particular order. This contest or challenge by the taxpayer of these orders is what is by way of appeals or revision. So, when we are talking about appeals, appeals is pleading or appealing to a appellate forum to intervene or to give you relief against the order which is passed by some authority who is authorized to pass the order. Revision is where you are taking the matter to the higher authority of the officer. So the officer who has passed the order, you are taking the matter to the higher up of that officer, requesting the higher up to check the order passed by the officer. That is what is revision. So what is the hierarchy? So first is order is passed by the adjudicating authority. You may go into appeal with the commissioner appeals. Against the order of the commissioner appeals, you may go in for appellate tribunal. In appellate tribunal, there would be two possibilities. There is a state bench, there is a national bench. If it is a state bench, then the order of the appellate tribunal by the state bench could be contested in High Court and High Court's order in Supreme Court. If it is the principal bench, that is the national bench, the order of the national bench can be contested directly in the Supreme Court. Second is where the order is passed by the officer subordinate to the revisional authority, then you can go in for revision to the revisional authority, and the revisional authority's order will then proceed to tribunal and then to High Court and Supreme Court. Now, the first is appeal to appellate authority. That is the first appellate authority, who is generally the Commissioner Appeals. Now, Section 107 provides for this. It says that an appeal against any decision order passed by the adjudicating authority shall lie before the appellate authority. Now, what is the time limit for filing this? The time limit for filing this appeal by the taxpayer is 3 months from the date of communication of the order, and this can be further increased by 1 month, which is also called as the condonation period. So in case there is a delay beyond 3 months, it can be done within 1 more extra month, which is called as the condonation period. Now, what is the form in which this appeal has to be filed? The appeal has to be filed in the form called as GST APL 01. And as we know, everything in GST law is electronic. So even this appeal has to be filed electronically. Next, however, an appeal to the appellate authority may be filed manually also in the same form along with the relevant documents only if the commissioner has so notified, or the same cannot be filed electronically due to non-availability of the order on the portal. So where either the commissioner authorizes you to file manually, or where the order is not uploaded on the portal, in such cases, you can file the appeal manually. And in such case, a provisional acknowledgement shall be issued to the appellant immediately. Now, when the decision order appeal against is uploaded on the portal, a final acknowledgement indicating appeal number shall be issued to the appellate, shall be issued by the appellate authority or an officer authorized by him in this behalf in APL 02. So APL 02 is the acknowledgement that your appeal has been filed and accepted. Where the decision order appealed against is not uploaded, the appellant shall submit a self-certified copy of the said order within 7 days from the date of filing APL 01. The final acknowledgement indicating appeal number shall be issued by the appellate authority in APL 02. So APL 1 is filing of form, APL 02 is the form of acknowledging the acceptance of the appeal on the portal. Now, whenever you want to file appeal, there is a compulsion that 10% of the disputed tax has to be deposited and 100% of the accepted tax has to be deposited. Only then you can file appeal. Now, what is this accepted disputed? So let us say an order is passed by the authority, the adjudicating authority, with three allegations. In one allegation, the liability which they have raised is acceptable to you. In the other two allegations, the liability and the allegations are not acceptable. In this particular case, the first amount or the liability in the first uh, allegation has to be fully paid, whereas the liability of the second and the third allegation are not required to be fully paid. Over there, up to 10% has to be paid. This is the amount of pre-deposit. Next, it is also possible that the department would like to go against the order of its own adjudicating authority. In such cases, the department can also file appeal with the appellate authority. The commissioner may, on its own motion or upon request from the SGST commissioner, examine the records of the proceedings, and once he is satisfied himself, will go for the appeal. Now, this appeal, if it is to be filed by the department, the time limit given to the department is 6 months from the date of order, which is again extended by 1 month, which is the condonation period. What is the form? The department will be filing appeal in form GST APL 03 along with the relevant document. And again, same, it may be filed manually also if the commissioner so notifies, or if the same cannot be filed electronically. Now, after filing of this appeal, the acknowledgement indicating appeal number, etc., shall be given in APL 02. If you have filed it manually, why? Because the order is not uploaded, then the certified copy of the order should be submitted within 7 days. And after that, the APL 02 will be issued, which is acknowledgement. So, taxpayer filing appeal APL 1, department filing appeal APL 3, and appeal acknowledgement APL 2 in both cases. Such application shall be dealt with as if it were an appeal made against the order, etc. There is no requirement of making pre-deposit in case of departmental appeal. So only taxpayer has to make pre-deposit. If department is filing appeal, they can file appeal without any pre-deposit. Now, once the appeal is filed, what is the role of the of the appellate authority? It should follow natural justice. It should provide hearing to both appellant, giving reasonable adjournment, which should not be more than 3. And it is also allowed that the appellate authority may permit you to file additional grounds if it considers it necessary. Now, how the order will be passed? The appellate authority can make further inquiry and pass its order, which may confirm, modify, or annul the decision order appeal against. So, whatever was the original order, that can be confirmed, modified, or even cancelled by the appellate authority. The appellate authority shall not refer the case back to the adjudicating authority. Now, this is interesting. When you go to higher level appellate authorities, they have power to remand back the case. The first appellate authority, that is Commissioner Appeal, does not has the power. AA can also increase the rigor of the order appeal against by enhancing any fee, penalty, or fine in lieu of confiscation, but this can only be done after it has given the appellant a reasonable opportunity. So the first appellate authority can also increase your liability. So it is not necessary that it is only reducing, it can also enhance. If AA is of the opinion that any tax has not been paid, short paid, or erroneously refunded, etc., no order requiring the appellant to pay such tax shall be passed unless the appellant is given a show cause notice. So where the AA has itself identified some new ground where tax has to be recovered, it can do it again by issuing notice within the time limit specified 73-74. The appellant may at any time before issue of said show cause notice or before issuance of order in respect of appeal file in 01 or 03 file an application for withdrawal in APL 0103W. So whoever has applied, whether the taxpayer or the department, before the order is passed, may even withdraw their appeal. Where final acknowledgement is issued in April 02, the withdrawal of the said appeal would be subject to approval of AA, and such application for withdrawal shall be decided by AA within 7 days. Fresh appeal filed by the appellant pursuant to such withdrawal shall be filed within the time limit. So, after withdrawal, if you want to refile, you can do that, provided the original time limit has to be followed. The order in appeal shall be a speaking order. It means the appellate authority, when passing the order, has to give the order in detail, specifying each of the points and whatever counters were raised, giving answer to each of the counters. The law provides an advisory time limit. Advisory means there is no compulsion, but the law has suggested that the AA should decide the appeal within 1 year from the date of filing the appeal. If in between there is any stay or etc., that period will be excluded. On disposal of appeal, the AA shall communicate the order to both appellant and the respondent. The copy of the order passed by AA shall also be sent to the jurisdictional commissioner of the taxpayer. Every order passed by AA shall be final and binding on the parties unless you dispute it further. Appointment of appellate authority. If the decision order against which the appeal is to be filed is passed by the additional commissioner or joint commissioner, the appellate authority is commissioner appeals. So order is passed by joint commissioner, additional commissioner, it will go to commissioner appeal. If it is passed by deputy commissioner or assistant commissioner or superintendent, the appeal will go to an officer not below the rank of joint commissioner. So this is the summary of the entire provision. Now we go to the revisional authority's power. The GST law provides a mechanism of revision by revisional authority. The revisional authority may on its own motion or upon information received by him or on request from the commissioner call for examine the records of proceeding. Here record include all record relating to proceedings under the CGST Act available at the time of examination. The revisional authority may either revise on its own account or upon request received, it can take up the examination and revision. On examination of the case, if the RA is of the view that the decision order passed by CGST, SGST by any officer subordinate to him is erroneous. Why? Because it is prejudicial to interest of revenue and is illegal, improper, has not taken into account material facts, or in consequence of an observation by the CNAG, he may itself stay the operation of such decision order for such period. So, where any of these reasons exist, the revision authority may stay the operation of that order. Thereafter, the revision authority, after making further inquiry, may pass such order as it thinks fit. Along with the order, the revision authority shall also issue a summary of the order clearly indicating the final amount. If the revision authority decides to pass an order which is likely to affect the person adversely, then such person shall be given an opportunity of being heard. Every revision order shall, subject to further appeal to tribunal, etc., be final and binding. Now, the powers of revision is subject to the condition that non-appealable orders and decisions under 121 cannot be revised. So, the revision authority shall not exercise the power of revision if the order sought to be revised has been subject matter of appeal at the higher forum. Period of 6 months from the date of communication has not yet expired, or more than 3 years have expired after the passing. So, before 6 months and after 3 years, it cannot revise. Order has already been taken for revision at earlier stage. It means second time revision not allowed. Order should be revised. Order sought to be revised, it's itself a revisional order. So once one order is revised, the revisional order cannot be further revised. Period to be excluded while counting the limitation of 3 years. If in between there was any stay granted by any high court or tribunal, so that period of stay will be excluded while counting the 3 years period. This is the common exclusion everywhere. Now, who will be the revisional authority? If the order is passed by additional or joint commissioner, it is the principal commissioner or commissioner. If it is by deputy, assistant or superintendent, it is the additional or joint commissioner. Now coming to appellate authority number 2, which is the tribunal. So constitution of appellate tribunal. The government shall, on recommendation of council, appoint, establish with effect from such date as may be specified an appellate tribunal known as the GST appellate tribunal for hearing appeals against the order passed by the appellate authority or the revisional authority, or for conducting an examination adjudicating the cases referred to in 171, which is anti-profiteering. So there will be two types of benches, principal and the state bench. Now, who is the principal bench? Principal bench is the national tribunal, which is at the New Delhi, which will consist of president, judicial member, technical member, center technical member, state. Then, on request of the state, the government may by notification constitute such number of state benches at such places and within such duration as may be recommended by council. So these will be the state benches. So you have the principal, that is the national bench. You have the state benches. Now, who are the members in state benches? Two judicial, one technical center, one technical state. In principle, it is one president, one judicial, one technical member center, one technical member state. Now, what is the jurisdiction? The principal and state benches shall hear appeals against the order passed by appellate authority or revision authority. However, the cases in any one of the issue involved relates to place of supply will only go to the principal bench. Further matters of anti-profiteering shall only go to the principal bench, and the government may, on recommendation of council, notify other cases, class of cases, which will also go only to principal bench. So three cases will always go to principal bench. One, place of supply. Two, anti-profiteering. Three, any other matter on recommendation of the government. Now, subject to above jurisdiction, the president shall from time to time by general special order distribute the business of the appellate tribunal among the benches and may transfer a case from one bench to another. So, following the above guidelines, the president has the power of bifurcating or dividing the cases between different benches. Vice President for state. The senior most judicial member within the state benches may be notified as the vice president of such state bench and shall exercise such powers of president as may be prescribed, but for all other purposes be considered as a member. Now, whether an appeal can be heard by a single member, the answer is yes. The condition is where the amount of tax or ITC involved does not exceed 50 lakhs and it does not involve a question of law. Then the president may approve that such matter be heard by a single member, that is by a single judge. And in all other cases, it shall be heard by two members where one is judicial, one is technical. Accordingly, cases can be heard by a bench consisting of single member in following conditions are satisfied. First, tax exposure is not exceeding 50 lakhs. It is not relating to question of law. President has given the approval and any other condition if prescribed are satisfied. Now, majority rule in cases of opinion, difference of opinion. So if let us say there is difference of opinion, how will the resolution be done? Then if after hearing the members differ in their opinion on any point or points, the member shall state the point or points on which they differ and the president shall refer such hearing where appeal was originally heard by a member of state bench to another member of state bench within the state, or where no such other state bench is available within state to a member of state bench of another state. So if the appeal is at the state bench, they will refer the matter to another member of the same state bench. Where the appeal was originally heard by members of principal bench to another member of the principal bench, or where no such other member is available, member of the state bench. And such point or point shall be decided according to the majority opinion, including the opinion of the members who have first heard the case. Transfer of members for administrative efficiency. The government may, in consultation with presidents, for administrative efficiency, transfer member from one bench to another. However, a technical member of a state may be transferred to a state bench only of the same state in which he was originally appointed in consultation with the state government. That is obvious. One state member, a technical member state cannot be transferred to any other state. That is obvious. But central member can be transferred. Defect in constitution not to render proceeding invalid. No act or proceedings or tribunal shall be questioned or shall be invalid merely on the ground of existence of any vacancy or defect in the constitution of the tribunal. Procedure. Now, what is the procedure? Appellate tribunal shall be bound by the procedure laid down in Code of Civil Procedure. However, it shall be guided by principle of natural justice. Appellate tribunal shall have the same power as are vested in civil courts under Code of Civil Procedure while trying the suit. So it can do following things. What? It can summon and enforce attendance and take examination on oath, require discovery and production of documents, receive evidence on affidavits, subject to provisions of 123, 124, requisition and any public record, issue commission for examination of witness, dismiss a representation for default, set aside an order of dismissal, and in other matter as may be prescribed. So these are the powers which the tribunal may exercise. Now, how is this appeal filed? So orders appealable to tribunal. Any person aggrieved by order passed by either the first appellate authority or the revision authority may appeal to the tribunal. What is the time limit? The time limit is 3 months. Now again, we are talking about time limit for the taxpayer. It is 3 months, and here the condonation period is 3 months. So total, it is 6 months. So first 3 months is the normal time limit. Further 3 months is the time limit, which is the condonation period, which will be allowed or not allowed. That is as per the choice of the tribunal bench. The 3 months period, it should be counted from later of date of communication of order or the date on which the president is taking charge. So till now the tribunal has not been formed, but now the dates have been announced. So for all the appeals which are pending, for all old appeals, the last date is 30th of June. Now what is the form? The appeal to the tribunal shall be filed in APL 05 along with relevant documents electronically. Appeal to tribunal may be filed manually again in APL 0 form along with relevant documents only if the registrar allows the same by issuing special general order to that effect, subject to such conditions restrictions as may be specified. Further, powers of tribunal to refuse an appeal. The tribunal may refuse to admit the appeal if the tax or the ITC involved or the difference in tax or ITC involved or the amount fine etc. does not exceed 50,000. So this is just to avoid appeals of very small amount being entertained. So minimum 50,000 is the criteria for going in for tribunal appeals. Memorandum of cross objection. The law also provides for filing cross objection by the respondent. So once appeal is filed by one party, the other party can file cross objection. It provides that on receipt of notice an appeal has been filed, the party against whom the appeal has been preferred may, notwithstanding that he may not have appealed against such order, file within 45 days memorandum of cross objection against any part of the order appeal against, and such memorandum shall be disposed of by the tribunal as if it were an appeal presented within the time specified. Now, what is the time to file this memorandum of cross objection? Within 45 days. Original time and further 45 days is the condonation period. So 45 days plus 45 days, 90 days is the period for filing cross objection. What is the fees? The fees for filing appeal or restoring appeal is 1,000 for every 1 lakh of tax. So roughly you can say it is 1%. However, the fees shall not exceed 25,000 and a minimum of 5,000. So maximum is 25, minimum is 5, and the criteria is per 1 lakh it is 1,000. Filing fees for filing of an appeal in respect of an order not involving any demand of tax interest penalty shall be 5,000. So where there is any order in which there is no tax amount involved, then the appeal fees will be 5,000, which is the minimum fees. There shall be no fees for application made before the tribunal for rectification of errors. What is the pre-deposit? Again, here the pre-deposit is 10%. So you already filed 10% as at the previous stage. Here you have to file additional 10%. Now, similar to the fashion how you file appeal, even the department is allowed to file appeal. Now, the department has to file appeal within 6 months from the date of communication of the order, and again this 6 months shall start from the date of communication of order or the date when the president takes the charge. An application to the tribunal shall be filed in form APL 07 along with the relevant document. So for government, the document is APL 07. Such application shall be dealt with by the tribunal as if it were an appeal made against the order of this. There is no requirement of making pre-deposit in case of appeal by department. Now, common provisions in case of appeal by the taxpayer and the department both. Memorandum of cross objection. So if taxpayer files appeal, government will file memorandum of cross objection. If they file, we can file memorandum of cross objection. For both, it is APL 06 in which it has to be filed. Date of filing where the order appeal against is uploaded on the common portal. A final acknowledgement indicating appeal shall be issued in APL 02. So we file in appeal in APL 05. Department files in APL 07, but acknowledgement for both is APL 02. If the order appeal against is not uploaded on the common portal, then the appellant shall submit or upload a self-certified copy within 7 days. So this is same like the previous. Where the said self-certified copy is submitted, uploaded for after a period of 7 days from the date of filing, APL 05, a final acknowledgement indicating appeal number shall be issued again in APL 02 on removal of defects. Now orders. The tribunal, after hearing both sides, may pass orders as it thinks fit, either confirming, modifying, or annulling the original decision. Or it even has the power to refer back the case to AA or RA. This is important. If you remember, we read that AA does not have the power to remand back the case, but tribunal has the power to remand back the case. Further, the tribunal may give adjournment maximum up to 3 adjournment before giving the order. The law provides again an advisory time limit of 1 year from the date of filing an appeal to decide the appeal. Again, the tribunal shall send an order to AARA, the appellant, the jurisdiction commissioner, and every order of the tribunal is binding unless appeal to higher forum is preferred. Rectification. The tribunal can rectify its own order if there is any mistakes which are apparent. The tribunal may amend any order passed by it so as to rectify an error apparent from record, and no amendment which has the effect of enhancing or an assessment or reducing a refund can be done without allowing the taxpayer an opportunity of being heard. Again, withdrawal of an appeal. So where appeal is filed to tribunal but the order is not passed, the withdrawal can be done in the similar form. That is, if taxpayer has done, it will be APL 05W. If department has done, APL 07W. Where final acknowledgement in APL 02 has been issued, the withdrawal can be done, but provided approval is taken from the tribunal, which will give the approval in 15 days. Mandatory pre-deposit, I already explained this. Admitted liability full amount, disputed liability 10%. Interest or refund of pre-deposit. If the pre-deposit made by the appellant before the AA or tribunal is required to be refunded consequent to any order of AA or tribunal as the case may be, interest as provided under 56 shall be payable from the date of payment of the amount and not the date of order of AA or till the date of refund. Production of additional evidence. Now this is important. There are two different things, additional ground and additional evidence. Now we studied above, if the tribunal wants, they can allow additional grounds. But what about additional evidence? What is additional evidence? Additional evidence is that evidence which you had not produced before at the lower stage, and now you want to produce it before the tribunal directly. The general rule is that the tribunal will not allow additional documents. Please differentiate again. Tribunal can allow additional grounds, but now we are talking about additional documents or evidence which the law says the tribunal cannot allow. However, this rule has an exception. What is the exception? The exception is that where the production of additional evidence before the lower authority, that is AA, could not be done, then the tribunal will allow the additional evidence here. So first rule is it will not allow additional evidence, but exception. What is the exception? First, the lower authority had refused to admit the evidence. So I tried to give the evidence, but the lower authority refused to take the evidence. Second, the appellant was prevented by sufficient cause from producing the evidence. So I wanted to produce, but there was some genuine difficulty because of which I could not produce. The appellant was prevented by sufficient cause from producing before the adjudicating authority, as the case may be double A, any evidence which is relevant to any ground. Where the adjudicating authority or the double A has made the order without giving sufficient opportunity to bring the evidence. No additional evidence shall be admitted unless the AA or appellate authority record the reason in writing, and no additional evidence is accepted unless it is giving an opportunity to the department to counter. So, in the above mentioned scenarios, it will allow you to file additional evidence, but first, only after recording the reasons would be the above reasons. Two, after allowing the opposite party to bring counter evidence or to cross examine any witnesses. Now comes appearance by authorized representatives. Now, who are these authorized representatives? These are chartered accountants, cost accountants, or the GST practitioners. So, as we all know, that the taxpayer himself may not be in a position to represent the case. So, Section 116 allows them to hire us as their representative. So, broadly, an authorized representative can be a relative, employee, advocate, chartered accountant, cost accountant, company secretary, or practitioner. It is provided that specified indirect tax gazetted officer having served for at least 2 years can also become the authorized representative. These are qualification disqualifications of them. Then comes appeal to High Court. Now, important point is once tribunal has passed the order, you cannot go to High Court in all cases. Why? Because you can go to the High Court only where the matter involves a substantial question of law. If it is involving a question of fact, the matter cannot be taken to the tribunal, cannot be taken to the High Court because tribunal is the last authority to give decision on matters involving question of fact. But where the matter involves a question of law, the appeal may be preferred to High Court. This is only if the order has been passed by state benches of tribunal. If the order is passed by the national bench of tribunal, it will directly go to the Supreme Court. Now, what is a substantial question of law? It means question that must be answered by applying relevant legal principle to interpretation of law. It is distinct from question of fact that must be answered by evaluating the relevant facts or evidences as well as inferences arising from those facts. So, question of fact and question of law, what is the difference? Question of fact will be on which date you have taken registration, whether you have issued invoice or not, whether you have proper invoice or not. These are question of facts. What is question of law? Whether ITC is eligible or not, whether this transaction is supply or not, this transaction is a composite supply or mixed supply, or what is the correct value of this transaction. All these are question of law, and question of law can only be taken in High Court and Supreme Court. If it is purely question of fact, it will be over at the tribunal stage. Now, what is the time limit for filing appeal? Appeal to High Courts are to be filed within 180 days from the date on which the order appeal against is received by the aggrieved person. So, within 180 days of receiving the order, the person can go to the High Court. Again, the High Court has the power to condone the delay, but here, how much delay? That is not specified. The appeal to High Court has to be filed in GST APL 08. On being satisfied that a substantial question of law is involved, the court may formulate the question and appeal shall be heard only on the question so formulated. The High Court has power to hear the appeal on any other question of law if it is satisfied that the case involves such question. High Court shall decide the question of law so formulated and deliver such judgment thereupon containing the grounds on which such decision is founded, and may award such costs as it deems fit. The court may determine any issue which has not been determined by the tribunal or has wrongly been determined by the state benches by reason of decision on such question of law. Code of Civil Procedure shall apply, and the appeal shall be heard by a bench of not less than two judges. And the point on which they differ, if any, shall be heard upon that point only by one or more judge of the High Court. Next, appeal to Supreme Court. Only after the judgment of High Court is passed, you can go to the Supreme Court. It is important that in any case which on its own motion or an application made by or on behalf of the party aggrieved immediately after passing of the judgment of order, the High Court certifies it to be a fit case. So after the judgment of High Court, even if you want to go to Supreme Court, the High Court should first certify that this case is suitable to be taken to Supreme Court. A direct appeal also lies to Supreme Court when the order is of principal bench of tribunal, that is national bench. Provisions of Civil Procedure Code relating to appeals shall apply to Supreme Court. Deposit of all taxes dues will be required unless stayed by the Supreme Court. The Supreme Court may vary, confirm, reverse the judgment of High Courts or of the tribunal as the case may be. Next, sums dues to be paid notwithstanding appeal. Sum due to the government as a result of order passed by the principal bench, state bench, or High Court, notwithstanding that appeal has been preferred to High Court, Supreme Court, shall be payable in accordance with the order unless it is stayed. Appeal not to be filed in certain cases. So 120 is the section which is giving you a list of those orders against which appeal cannot be filed. First, the board may on recommendation of council issue orders or instructions or directions fixing monetary limit for regulating filing of appeals. So when the department wants to file appeal, the council may fix a limit below which they cannot prefer the appeal at higher forum. Non-filing of appeal application by the GST officer on account of such monetary limits fixed by the board shall not preclude such officer from filing appeal application in any other case involving the same or similar issues. So I have not filed appeal in one case. Why? Because your matter was below the limit given by the council for filing appeal. But same matter is of any other person or of your only in some other year where the amount has crossed the threshold. Now I can definitely file the appeal. No person who is party in application or appeal can contend that the GST officer has acquiesced in the decision on the disputed issue by not filing an appeal. So simply because I have not filed the appeal, why? Because of that monetary limit, that will not preclude me from filing the appeal again in future wherever the amount exceeds the limit. And you cannot take this in your defense that since I did not file appeal in the previous case, now I am precluded from filing this appeal. That is not a stand that you can take if I have not filed it on account of monetary limits. The tribunal or court on hearing such appeal or application shall have regard to the circumstances for non-filing of appeal or application by GST officer on account of monetary limit fixed by the board. Clarification regarding monetary limits for filing appeals or application or specially petition by department before GStat, High Court, Supreme Court. So this is the monetary limits. Before GStat, it should be minimum 20 lakh amount. For High Court, it should be 1 crore amount. And for Supreme Court, it should be 2 crore amount. Only then the department can file the appeal. What are the non-appealable orders or decisions? Section 121 says that for certain orders, appeal cannot be filed. Thus, an order of the commissioner or other authority empowered to direct transfer of proceedings from one officer to another. An order permitting the seizure or retention of books. Order sanctioning prosecution. An order under Section 80 allowing payment of tax in installments. So for these orders, appeals are not maintainable. Now we go to advance ruling. What is advance ruling? So as the name suggests, when you take some order or when you take some ruling of the department before you have done the transaction, such ruling is called as advance ruling. Now, when do you resort to such type of advance ruling? So you are the taxpayer. You want to enter into a transaction. You are starting a new business and you are not sure about what would be the tax implication. Now, you do not want to make a mistake and then pay interest penalty. So the law provides you an option that before you enter into the transaction or start that type of a business, you can make an application to the department. Within the department, there is a specific, you can say a branch or a wing, called as AAR, that is Authority for Advance Ruling. You will make application to this Authority of Advance Ruling, which will first check the jurisdiction because there are certain provisions for which advance ruling cannot be sought. If you are seeking advance ruling for other provisions, then they will allow and process your advance ruling. In such cases, your advance ruling will be accepted, and then the AAR authority will be deciding on the questions that you have asked and will be giving the ruling. Now, most important, the ruling given by that AAR, that is the Authority for Advance Ruling, is binding on you and your officer for your case. Means both of you cannot object that advance ruling, you will have to compulsorily follow. Yes, if you are not satisfied with the ruling, you may appeal against that ruling at the higher authority, which is AAAR, that is Appellate Authority for Advance Ruling. So this is what is the ideology of advance ruling. So decisions provided by the authority for advance ruling or appellate authority for advance ruling to the appellant on specified matters or question which may be related to supply of goods or service or undertaken or proposed to be undertaken by the applicant. So whatever transactions you are going to undertake, for that you may seek advance ruling. Now, questions for which advance ruling can be taken means besides this, no other question or issues can be taken for advance ruling. First is you can go in advance ruling for classification. Second, whether a particular notification applies or does not applies. Then for determining time of supply, value of supply, determining whether ITC will be available or not, determination of liability to pay tax, whether applicant is required to be registered. Next, whether any particular thing with respect to goods, service amounts to supply within the meaning of that term. So in short, determining the transaction to be supply or not. Now, what is the procedure? So first, you have to make an application in the prescribed form to the AAR with a fees of 5,000 each under CGST, SGST. The application, verification contained therein, and all relevant document to be signed in the prescribed manner. AAR will send a copy of the application to the concerned officer and if necessary call for further information from the concerned officer, and on the basis of these records, it will further proceed to determine your matter. How? The AAR will examine the application, the records, and after hearing the applicant or his representative, pass an order either admitting or rejecting the application. So, whatever you have applied in your application and on the basis of the records which it has received from the department, it will now examine your case and take a call. Application not be admitted in the cases where the question raised is already pending or decided in any proceeding in the case of the applicant under the provisions. So whatever matter you are trying to raise in AAR should not have already been decided earlier or should not be pending in any appeal. So if it is already litigated by you, you cannot come to AAR. If application is rejected only by way of speaking order, giving the reasons for rejection, application not to be rejected unless an opportunity is being heard. Now, copy of the order admitting rejecting the application to be sent to the applicant and the officer. If application admitted, ruling to be pronounced within 90 days of the receipt of application. Opportunity of being heard to be given to the applicant, authorized representative, officer of authorized representative. In case of difference of opinion between two members of AAR, points to be referred to AAR. If AAR also unable to come to a common conclusion in respect of the points, it shall be deemed that no advance ruling can be given in respect of that question. Copy of the advance ruling duly signed by the members certified in the prescribed manner to be sent to the applicant, concerned officer. Rectification of mistakes. AAR, AAR can amend their order within 6 months from the date of the order. Such mistakes may be notified either by the authority on its own or brought to notice by the applicant or the concerned officer. If tax liability increases or ITC reduces, due to such rectification, applicant must be given opportunity of being heard. Now, Section 103 says, whatever is the ruling, it shall be binding on the applicant officer, not applicable to similarly placed other taxable person. So it is not binding on any other person, even though the matter or the issue is same. Now it is binding till the period when the law or the facts supporting the ruling have not changed. If there is amendment in law, from that day the ruling stops, or if there is change in the facts, the ruling will stop. If the ruling is obtained by way of fraud, suppression, misrepresentation, then it will be deemed that such ruling has never been made. In other words, your ruling will become void. Order to be passed only after hearing the applicant, and copy of the order to be sent to the applicant concerned officer of that particular applicant. So this is all about advance ruling. Now some miscellaneous provisions. Okay. What are these miscellaneous provisions? So the miscellaneous provisions are: first, presumption as to documents, admissibility of documents as a to information, which is also called as information return, power to call for information, bar of disclosure of information by a public servant, consent-based sharing of information furnished by taxable person, publication of information in respect of certain persons, then removal of difficulties, delegation of powers, omission, etc. So let us take up these pointers. So presumption as to documents. Firstly, what are the presumptions? It is produced by any person under the CGST Act or any other law, seized from the custody or control of any person, or it is received from any place outside India. For all these documents, what the law says, tendered by the prosecution in evidence against such person or any other person who is tried jointly with such person. So what does this point says? That presumption generally means an act of accepting that something is true until it is proved untrue. Section 144 laid out presumption that are taken cognizance by the court when certain documents are submitted as evidence. So when any of these documents, which either you have produced or which are seized or which are received from outside, they are used as an evidence against you. So firstly, 144 presumes that. What is the presumption? Firstly, that whatever are the contents, they are true, that the signature which is supposed to be in a handwriting of any particular person is that person's handwriting, and the execution or attestation in the document has been made by the person by whom it is supposed to be so executed. So in short, whenever any such document is used as an evidence by the department, these three presumptions are there. First, whatever is written is true, the signatures are of yours, and the execution attestation is also done by you. Next, admission my computer has. So what is these will lead to microfilms, facsimile copies, computer printouts, information stored electronically. Microfilm. A microfilm of a document or the reproduction of images embedded in such microfilm, whether enlarged or not. Facsimile copy of a document, that is fax. Statement containing a document included in a printed material, information stored electronically. So all this, such document shall be admissible in any proceedings under the Act without further proof or production of the original. So when you produce any of these things, instead of producing the original, What does 145.2 says? A certificate identifying the document containing the statement and describing the manner in which it was produced, giving such particulars of any device involved in the production of that document as may be appropriate for the purpose of showing that the document was produced by the computer shall constitute an evidence of any matter stated in the certificate. So, this is about furnishing, collection, and publication of information. Now, what does 151 says? It empowers the commissioner or officer authorized by him to direct any person to furnish information. The information may be sought relating to any matter dealt with in connection with this act within such time, in such form, and in such manner as may be prescribed. Bar on disclosure, no information with respect to any matter given for the purpose of section 151 shall, without previous consent in writing, be disclosed. So the information should not be disclosed without taking permission. No such information shall be used for the purpose of any proceedings under the Act without giving opportunity of being heard. Exception. No restriction shall apply to the publication of information relating to a class of taxable person or a class of transaction if, in the opinion of the commissioner, it is desirable in the public interest. So only in this case, your information can be disclosed. Now, disclosure of information by a public servant. So the general rule is that whatever information is collected, like how you are filing returns, so much data is there with the government, no government servant is allowed to disclose or share your information with anybody. So first point, information documents which are collected is to be treated as confidential. So for the officers, all data that is coming to them is highly confidential. Exceptions, that is particulars that can be disclosed. 158.3 lays down that notwithstanding anything contained in 158, the following information may be disclosed. First, in case of prosecution, any particulars in respect of any statement, returns, affidavits, etc. for the purpose of prosecution. Second, for carrying out the object of the act, any particulars of the central state government or person acting in the implementation for the purpose of carrying out, and for service of notice. So only in these cases it may be disclosed. Then restriction on courts. 152 overrides the provisions contained in the Indian Evidence Act. It states that court shall not require any GST officer to produce before it or to give evidence before it in respect of the particulars referred to in 158.1. Next, consent-based sharing of information. Now, what is this? A new concept has been brought in whereby your consent is taken prior so that whatever you have shared or whatever you have filed, uploaded may be shared. Following details furnished by a registered person may be shared by the common portal with such other systems as may be noticed by the government. First, particulars furnished in application for registration or in the return filed in 39 or annual return. Second, particulars uploaded on the common portal for preparation of invoices, like when you want to prepare e-invoice, or the details of outward supply furnished in 37, and particulars uploaded on common portal for generating e-way bill. Such other details as may be prescribed. For the purpose of sharing, the consent shall be obtained of the supplier and the recipient. So now this is the inbuilt condition a consent so that any of these informations which is already uploaded by you, which is available on the portal, may be shared. Next, publication of information in respect of person in certain cases. This section confers power on the commissioner for publishing names and other particulars of persons in certain cases. What are they? What type of information? The names of any person and any other particulars relating to proceedings. Who can publish? Commissioner. What is the manner? The information shall be published in the manner as the commissioner authorizes. When such information is published, if the commissioner officer authorized by him in this behalf is of the opinion that it is necessary. Is there any additional information? In case of firms, company, association of person, names of partners of firm, directors, managing agents, secretaries, treasurers, etc. As the case may also be published. What is the limitation? No publication under this section shall be made in relation to any penalty imposed under the Act. So basically, when any person is a defaulter, the government may decide to publish the names and details of that person. Next, 153 enables an officer not below the rank of AC to take assistance of an expert at any stage of scrutiny, inquiry, investigation. It may be noted that such decision shall be taken having regard to the nature and complexity of the case. So under this section, they may hire us also for assistance. Assessment proceedings not to be invalid on certain grounds. Now, which proceedings are covered under this provision? Following: assessment, reassessment, adjudication, review, revision, appeal, etc. On which ground will such proceedings not be held as invalid? Such proceedings shall not be held invalid merely for reason of mistake, defect, omission in such proceedings. So where in substance everything is right, but let us say wrong section number is written, by mistake wrong assessee's GSTN is written, that will not make the entire proceedings invalid. When will the service of any notice, order, or communication be not called in question? The service of notice, order, communication shall not be called in question if the notice, order, or communication has already been acted upon by the person. This is very important. So if you have received the notice and if you do not believe that the notice order is valid, then you should communicate this at the first instance. Where you have not communicated that, then it will be assumed that despite of the defect in the notice communication order, you are accepting it, and this acquiescence, that is this acceptance, can go against you. And then the next point is rectification of order apparent on the face of the record. So wherever there is any decision, order, etc., if there is any mistake which is apparent, then the same person who has issued that order or notice can rectify the mistake. But the condition is that the mistake should be such as is apparent from the record. That is, there is no debatable point on that particular thing. So if there is any point on which we both have difference of opinion, it is not called as a mistake. It is a dispute. It cannot be rectified. So with this, we have completed the major provisions and we have completed all the 4 topics assigned for today. So we conclude our today's session here. Kindly read all the chapters, kindly revise and make a note of all the relevant provisions to enable you to revise, recall the provisions faster, easier at the time of your exams. So with this, thank you very much. Let us connect for our future sessions as per the schedule. Good night, everyone. Good night, Manish ji. Yes, sir.